Yeah, hello everybody. Happy Friday. We made it. We made it. We made it. We made it. Boy, this is unbelievable. We got people in the waiting room already trying to enter into the wheel. I love it, guys. Make sure you share that with everybody. Let them know, even if they're not a Prosper student, let them know they come in here, get all this great information, get the market updates here, and actually get into the wheel spin even if they are not a member. All right, like I said, here we are on Friday. Made it through the week, made it through Fed minutes, made it through CPI yesterday, PPI this morning, and you know what? The markets are pushing on all-time highs once again. We're actually seeing the 10-year, okay, that's the interest rate that everybody watches the closest. We're seeing the 10-year popped this morning above 4.1%, and now it's back down to about 4.06 or so. So what is driving the market higher today? It could be that rates are coming back down a little bit. Whereas yesterday's CPI report was just a little bit hot, call it lukewarm. It wasn't boiling hot. Today's PPI report, the producer price index, was about the same, but on the soft side, a little bit on the cool side. So maybe they balanced one another out. Then we got consumer confidence, the Michigan consumer confidence. That was a little lighter than expected. All that adds up to, look where the markets are. S&P's just off their highs of the day. SPOOs are up right now. When I say SPOOs, that's a reference to S&Ps. SPOOs are up 27 points right now. They were up, let's see, the high of the day, it was not much higher, about 10 points higher or so. The banks are on fire. Financials are on fire today after JP Morgan blowout earnings and great guidance. I mean, this move for JP Morgan, 5%, that is an outlier move. That is a huge, huge move. So we're seeing JP Morgan up 5%. We're seeing Wells Fargo up 6%. So the financials looking really strong. Goldman Sachs with earnings next week. Goldman Sachs up 2%. That's a huge, huge move for Goldman Sachs. So financials really leading the way today. Tech's hanging in there. I wouldn't say that it's, one way or the other. It's had a pretty good run this week, especially cybersecurity stocks. Those of you who are in my room know that trying to lighten up a little bit before the weekend here. We're paring down some positions, whether we're exiting overall or whether we're just, taking some partials off. Really want to go into the weekend just a little bit flatter than we are right now. Because as you know, regardless of which room you're in, guys, there is obviously no shortage of opportunity out here. There's really no shortage of opportunities. So, we want to move the inventory, right? We want to churn it out. We want to get in something. If we see our moves, maybe we're willing to take them off a little bit quicker now because of all of the opportunity out there. And with earnings just starting in a whole week. In fact, let me pull this up for next week, and this will be posted in our week ahead email that you will get on Sunday. But here is a screenshot from Earnings Whisper, which is something we follow really closely here, about the headline earnings for the week coming up. So there's a lot that are on my radar. It's probably some on your radar as well. United, after the big move in Delta Airlines, United could be one. Obviously, the other financials like Citicorp, Bank America, okay, Schwab. We have a position in Schwab that we took earlier this week in anticipation of a run-up into earnings. That's one of the ones that we have paired off. It actually will be completely out of that position by the end of today. That was a nice, 65% winner or so. So those are some on Tuesday. Then on Wednesday, we've got further financials with Morgan Stanley. Definitely looking at that. Equifax, we're going to take a look at that one. That's a sneaky one, which might have some opportunity. And then PPG on the short side. we're going to be looking at that one also. And then later in the week, then you really start into some of the other non-financials, okay? Like Netflix on Thursday. That's going to be the real big one there. And then TSM, Taiwan Semi. We are trying to get into a position there. We're not in yet. Stock's up $4 today, or about 2.25%. Waiting for the stock to pull back. We have a signal out there. If we don't get in today, patience. We'll reevaluate, look at it on Monday. We never, ever want to rush into a position, but that's a big one that we are looking for. And then on Friday, American Express, Ally Financial, those are ones. So as you can see here, it's going to be a really, really busy week next week with earnings. Not so much on the data side. We've had eco data going nuts, really driving the markets for the last couple of weeks. Now it's earnings, folks. And as I was on Charles Schwab this morning, and I was actually supposed to be on Fox Business this afternoon at 2 o'clock, but they said they're canceling all their interviews because they're just dealing with Tesla today, so I'm going to be on Monday. But same thing. I'm going to be talking about this market, and we talked about it yesterday, looking at how this market has fared when we've seen rallies like this. Unless we get a big derail with earnings, I think we can continue this grind higher. All right, I see all these me's up here. Let me give the reminder for that. The reminder is, if you want to be entered into our spinning wheel, our wheel that we spin for swag at the end of the day today, just put me up here and we will get you entered in. Okay, another one we're looking to pare down and take off, guys. We have been long some oil stocks here for a while. MPC, XOP. We have pared those down. We're actually trying to exit the entire positions on those. Actually, XOP, MPC not quite yet. Oil has made a great run. We have taken advantage of that. So again, just trying to get things a little bit pared down before the weekend and get right back at it next week. All right, so we put out in our headline today that I wanted to show you one of my scanners that I have been working on. And this one's just going to be a basic one, and yes, I can share it with everybody if anyone uses Thinkorswim, which I think most of you do. Okay, but this is one that gives me a little bit of a tip-off to stocks that are really close to a 50 or a 200-day moving average, and also RSIs, relative strength indicators. Okay, relative strength indicator. We don't talk about that one much, but that is more of a sentiment indicator than anything else. So I run those scans, that 50 and the 200-day moving averages, along with both looking for really low RSIs, so RSIs where a stock may be really oversold, and then also high RSIs, stocks that might be really overbought. Because when I can combine looking at a 50 or a 200 with an RSI where a stock may be oversold, overbought, that could help us with the type of signal that we may want to come up with. All right, so I'm also then looking, I don't want to look at the whole world of stocks like that because I don't want 5,000 stocks to appear, okay? So we're also putting in there volume, right? So it's got to be a stock with volume where there's a lot of liquidity and that we know if it's going to show up here and we're going to potentially trade it, there is enough open interest, enough liquidity that it's going to show up. So let me bring this into the screen here, guys. And can everybody see this now? And hopefully the lighting is a little bit better today. I know some of you commented that it was really dark in my background yesterday. Any better today? While I'm in my remote studio and not on the floor? Okay, great. Great. Okay, so I ran this one earlier this morning. We're going to redo it right now. I'm going to show, for those of you that don't run scans or whatever it might be, I'm going to show you how you do it. So this scan, and I'm going to go through 4 of them with you. This scan right here, okay, is a low RSI scan. Okay, so we're looking for RSI here below 30. Now, I'm going to flip between this and I'm going to flip between my actual charts here, which show RSI. Hang on one sec. I've got so many things up on my screen here. I've got to get everything in order, which I probably should have done here. Okay, here we go. So let's take a look at just this stock right here. This happens to be Schwab, Charles Schwab. Okay, on the top part of my Thinkorswim here, this is just the stock price. Okay, many of you ask me, well, how do I see implied volatilities? How can I get that as an indicator on my charts? Well, I have it on here. It's just compressed down here. So this area right here, if I expand that, there's where my implied volatilities are. Okay, now, at the very bottom, next subset of data I have down here, here is my RSI. Here is my RSI. Okay, so we can see a range here, and I have the range set at 30 to 70. Now you can use any thresholds you want. Okay, really, an RSI of 20 or 25 or lower means it's an extremely oversold. And an RSI of 75 or 80 or higher, extremely overbought. But when I ran those scans and did a comparison, I really kind of left out a lot of stocks for potential opportunities. So I tweaked that a little bit, and now I use, instead of like 25 and 75, which you can do, I use 30 and 70. And that didn't open up a ton of possibilities, but it did expand the results significantly, where there were a lot of things that I could then look at. Okay, so does everybody see this up here on the screen? And again, if you want my layout, yes, John, right? Let me go back to the vol chart here because you're asking. Yes, so the red line here is the implied volatility. The blue line is the historical volatility. I typically just follow the implied. I don't really care too much about historical. Yes, you can look at it to get a reference, but the red line, the implied volatility, is really the key that we are looking at. Okay? All right. So let's get back to our scan here. And what we're going to do is we're going to scan it live here. So here we go. Okay, here's the scan again. This is an RSI less than 30. And I should add in here, and you can tweak this as well also. I am using 7 bars. That means 7 trading days. You can shorten that up to 2 days, 3 days. Again, I want to see that opportunity out there. Even if something has passed a few days ago, maybe there's something that's still relevant. But again, you can tweak that, you can tighten that up, you can expand it out, whatever you want to do. So RSI less than 30. And in this one, I've got within 5% of the 200-day simple moving average, also within 7 bars. So if I'm within 5% of that 200-day moving average, whether it's above or below, this is going to come up on the scan. Does everybody see that? Okay, great. Okay, this is kind of fun. I feel like I'm about to press the wheel, to spin the wheel. Instead, we're going to hit scan, and you can see it populating, doing its thing, scanning. There we go. These are the results, excuse me. These are the results that came up with those scans here. Okay, now, that doesn't mean every one of these is going to be a tradable opportunity. But what it does is it filters out for me based what I want to see. Frank, yes, we can add implied vols in here. I have a separate scan for that, which I'll show you. Okay, so off of this scan, and this is still showing up today, those of you who are in my room know that we actually took one of these signals. We took this TMF. We also put out a signal in TLT in one of the other rooms, which we didn't get filled in on, but we took TMF. Now, why did we take TMF? Okay, just because this shows up on here doesn't mean, boom, I'm automatically going to trade this. Just like when Charlie Moon with his AI data set says to everybody, just because it shows up doesn't mean we automatically take a trade. We've got to verify it. That's where the human element comes into it. That's where the trader's mindset comes into this. Okay, so let's focus on TMF and why it showed up here. Okay, so let's take the scan off and we're going to go to TMF. And let me expand the screen here a little bit. Okay, here's TMF. Now TMF, and this is one of those things, again, you have to understand, you have to know what the stocks are that you're trading. TMF is a proxy, if you will, for the 20-year bond, 20-year treasury. Okay, now TLT is the closest one. TMF is actually a 3x. It's a 3x bullish position, or ETF, based on the TLT, which is representative of the 20-year treasury. So this showed up because we were within a 7-day period close to the 200 here, and let me expand the RSI. Look at how oversold this is. And if you think about the correlation between this and what's happened in the treasury markets over the last week and a half since the Fed came out with their move, what has happened? Treasury yields have soared while the treasuries themselves, the prices of treasuries, have gotten absolutely annihilated. So there's been nothing but selling here, which is definitely cause for this RSI being way down in the dumps. So we're looking for a pivot there. We're looking for a pivot in that RSI. Obviously, we're also looking for a pivot off of the 200-day moving average to the upside. So we took that. That was one I looked at. I really, really liked the opportunity both in TLT and TMF. Okay, so even though we just slipped down below the 200-day moving average, it is still showing up because it's within that 7-day period there. And especially if I shorten this up here, look at this chart now. This is now a 6-month chart here. Okay, look at the trend. Look at here, 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 here. Okay, then same thing, look at here, 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 and here. What do you see there? I'm going to draw a line here. What do you see there? I see higher highs and higher lows. Okay, I see higher highs and higher lows. Until that pattern is broken, I'm gonna play into that. So that is why we entered in right here. Exactly, Robert. That's why we entered in right there. Now, I probably would not have ever seen this TMF. I certainly am watching TLT. I probably would not have seen TMF without this scan. Okay? Again, just because something comes up on a scan doesn't mean you trade it. You have to look for reward to risk. You have to look for all those other things that we look for. Now, let me go back to our scan here. Okay, this was the 230, 200-day moving average 30 RSI. Now I'm going to do a 200 moving average, but a 70 RSI. So now I'm going to look for same. I want to see a stock with 7 days within 5% of the 200-day moving average, but now a stock where the RSI is really overbought. Okay, really overbought. So on this scan, you can see the only thing that's actually changed here is the RSI. Instead of less than 30, I've got greater than 70. Okay? The 200-day moving average, that's the same, within 5% either direction. Now, if you look close enough on here for those that are in Opval, if you're not, that's okay. But if you look close enough here, you're going to notice one that we took. CVS. Okay, so what did we do in CVS? Let's take a look. Pull up CVS here. And here is that. Actually, let me bring in my Thinkorswim chart on that instead. As you guys know, I use a couple different sets of data and different sets of charts. So first, let's identify this pattern here in CVS. Okay, right up to the 200-day moving average here. It's been a long time since it's been there. So right up to the 200. So there was the indicator for that. And then if we pull in our RSI, look at how overbought CVS is. So what I've done here is I identified a stock that is trading up to the 200-day moving average, which could be some resistance. Coupled that with the fact that it is really the sentiment, okay, is really overbought. So what do we want to do there? Take a bearish position if it makes sense. Can we get reward to risk on something that we may want to take a bearish position on? So that's what we did here. Does that make sense to everybody? And I know we put up here now, you got about 2 minutes left. If you're not already entered in the wheel, you got about 2 minutes left to get in there. Okay, does everybody understand on this scan what this is scanning for? And again, this isn't the end-all be-all, right? You can scan for whatever you want. It's not the end-all be-all. But we use these to help us identify which stocks we want to look at. That could, most of the time, that could be the hardest thing to really find out is how do we know what to look at? Besides stocks that are, obviously in the news because of earnings, or Tesla because of, what happened with their robo-taxi thing last night. Besides stocks like that are in the news, how can we sort out through the world of tens of hundreds of thousands, okay, of stocks out there, what to look at? Okay? Now, let's go back to these scans. I also do the same thing for the 50-day moving averages. Okay? Also do the same thing for the 50-day moving averages. So now we're going to bring in my scan for 50-day and 70 RSI and hit the button, scan away. Okay, here's a whole new set of stocks to look at. And just as a review here, what do we see? We've got RSI greater than 70 and now 5% within the 50-day moving average. And then lastly, we'll look at the 50 and 30 RSI, which is right here. Let's hit scan. And a lot of them are going to overlap, right? We're going to see between the 50 and the 200 day, a lot of them may overlap, and that's fine. That is fine. In fact, let's take a look at this one because this one was a really hot stock, I don't know, about 9 months ago. KView. This is now showing up on low RSI and right near the 50. So let's take a look at KView and see what the heck is going on here. I remember we had a position on in KView earlier in the year. Okay, so here we can see the RSI. Really, really low. It's actually below 30. We're about 29. So that's why it just popped up today. Didn't even pop up yesterday. It popped up today. And we just crossed down below the 50-day moving average. Okay. And we're kind of now sitting between the 50 and the 200. So to me, even though it showed up on this scan here, I don't necessarily want to get long this one. I like the RSI. I like that it's really, really oversold. I need to see some more proof, for me anyway. I would like to see it down to this area right here. This big yellow bar is a volume bar, which also coincides with the 200-day moving average. Now, that's only $1 below, but that is a 5% move down below. So what I'm going to do, now that I have this, now that I've run through this scan, I'm just going to put an alert out for me where if the stock gets down to about 20.5 or so, great, I'm going to take a look at it again. That's my thought process. That's how I go through this. Okay, these are not standard. These are ones that I've created. I'm happy to share these with you. I can give you the links to all of them. If you'd like me to do that, I will put that in the chat right now. How many of you want a copy of these scans? Okay, let me do that, then we'll go to the wheel. Okay, and there's going to be 4 of these. This first one, what are we on right now? This is less than 30 and 50. So okay, here is the link, everybody. This first one, let me put in here, is 50-30. Okay, 50-30. So you're going to know that's 50-day moving average, 30 RSI. Okay? Second one, and I'll stick with the 50. So we'll do the 50-70. Okay, so this next one is going to be 50-70. And let's share this guy here. Why did that one didn't share? Hang on, let me do this again. Share. There we go. Open link. There we go. Okay, this one is the 50-70. Now I'm going to run the 200-day scans. The first one will be 230. Let's share that. Okay, here is that one. And the last one I'm going to run is the 270. Okay, it's running. Let me get it populated first. There we go. Now I am going to share. And this last one is 270. Patrick, let's take a look at that before we go to the wheel. Yeah, you're looking at this gap right here in K-View. I would definitely get in well before that though. That 200 there looks pretty good to me because it also coincides with this big volume bar right there. All right, everyone. Wheel time, wheel time. Let's get this thing populated up here. Ooh, looks like we have more in there today. That's good. That is good stuff. Okay. I got to get like real drums or something here instead of just pounding on my desktop. Cirrus or Sirius, whatever your name is there, sorry about that. The filter in there is 5%, either above or below. You can tighten that up. You can make it 10%, you can make it 2%. It's 5% within the 200-day moving average above or below. Okay? All right, here we go, guys. The wheel is spinning. And we have got Zora. First in, first out today. Zora, you still with us? You got to be here to win, guys. You got to be here to win. Oh, no. Zora, where are you? Yes. She is here. Okay. You know the game we got to play here. Shoot us an email to prosperswag@prospertrading.com. Zora, give me your address, the size. We'll get you some new swag out there. All right? Now, serious, there's a ton of scams that we look at. That Mike, that Charlie, and I look at. There's a ton of scams. These are just some simple ones to get you started. You can filter for anything you want to do. All right? Everybody, have a fantastic weekend. Really appreciate you all listening in. Smash that like button. Share Market Minds with your friends and whomever else, even if they are not Prosper students. Love to have them in here. We are growing, and that's thanks to you guys. So thank you, everybody. Have a fantastic weekend. We will see you on Monday.